This conference will now be recorded.
Yes. So in the last class, we have been discussed about the time value of money calculation, and also we have been seen with the debt schedule calculation. So is that everyone were clear with that? So please type it as yes if you are clear. In case if you have any doubt, please share it with me. Yeah, thank you for your responses. So we shall go for ahead with the concept called financial statement calculations. So any organization, if I want to know that what is the position of it, whether it has been working good, and is it drowning or is it floating or it has been sink. So to know the position of a company, so we have to know the financial statements of any kind of businesses. So what do you mean by financial statements? So I'll just share it with my screen. Hope it is visible to everyone. So let me explain you a simple way. Financial statements are a collection of summary level reports about an organization's financial results, financial position, and cash flows. So they include the income statement, balance sheet, and statement of cash flows. So these are the important the financial statements which will talk about what is the position of your business. So whether they are capable of continuing the business or whether they are supposed to take any kind of decision so that they can be able to run with their business, or whether they have to think about to sell their business, or whether they are very capable so that they can be able to expand their business, or they can buy a new business and merge it, acquiring. So these are the things. It will talk about the numbers and it will say that what is your position as of now. Okay, so now first and foremost we are going to talk about the income statement. So an income statement is a financial statement that shows you the company's income and expenditures. It also shows whether a company is making a profit or loss for a given period. The income statement along with the balance sheet and cash flow statement helps you understand with the financial health of your business. The purpose of an income statement is to show a company's financial performance over a period. It tells the financial story of a business activities. Within an income statement, you will find all the revenue and expense accounts for a set period. So there's an explanation. So now let us see that how a income statement will be prepared. So I'll just share it with that a screen. Yes. So here you can be able to see a format of an income statement. So the first and foremost thing is sales or revenue. So this is the income source for any kind of business. There are three types of businesses. So one is manufacturing business, another one is trading business, and another one is service industry. So in any kind of business, only the two minimum transactions we are going to do it with. One is purchase and another one is sales. So when you are going to make the purchase, it is an expenses to the business. When you make an sales, it's called as an income, which is also called as an revenue. So now let us see that when you are going to make a revenue, the sales, on that, what is that cost of goods sold? So that is, what is the value you are going to spend it for the sales has happened. Okay, so for example, if I want to say it as, I'll put it in the chat. So if there is a purchase for 10,000 and the sales has happened for 18,000. So we have to check it out whether whatever we have purchased, the worth of 10,000, is that we have sold it completely and we have been made the sales of 18,000, or whether we have been able to make a sales only a part of purchased whatever the purchase has happened. So with the 70% of it, and we were able to make a sales of 18,000. So there is a difference over here when you are going to make it the complete purchased goods. If you are going to sell it and you are making 18,000, and you might be able to make it 18,000 with the partial of the goods what we have it with us. Okay, so when you are going to calculate this COGS, it is going to be, so the formula for calculating the sales or revenue, it is going to be the number of units into the number of the number of units into sales price per unit. So this is the calculations what we are going to do it on the sales. So whatever the units we have been sold, on that what is the sales price per unit. So this will give you the sales or revenue value. So this is in case of when you are going to make a sale of a goods. Suppose if you are into a service industry or service industry, directly we can take it as a sales value. So at what value did we make a sales? So suppose if you are going to take it as a value only on the goods, so how do you calculate it is? So it will be beginning inventory plus purchases minus closing stock. Okay, so this is how the calculation we are going to do it in case of value. If you don't have an quantity, so if you have only value, so we are going to calculate it with this formula. Okay, so in this way we can be able to come to know that the sales or revenue value and the COGS value calculation. So COGS value calculation will be number of units sold into purchase cost per unit. So you can be able to calculate it in the two ways. One is with the values, beginning inventory plus purchases minus closing stock value, and another one is when you are going to say it as the units. So you can calculate COGS value with number of units sold, that is the quantity, into purchase cost per unit. So these are the ways. So you can be able to calculate with the COGS value. So with this, when you are going to find the difference between the sales or revenue minus COGS, so the value what you are going to get is called as the gross profit. So when you are going to find the gross profit, it is not going to be the final profit. So we have to see it. There are certain things which we have to bear it. So that is like operational expenses, which is also called as a short term as Opex. So this Opex values will include the selling expenses, general and administrative expenses. So anything it comes under this, so that it will be removed and you are going to get the value. The total value of the Opex will be subtracted with the gross profit value, and this value is called as EBITDA. So EBITDA. So can anyone try to get me this abbreviation? The full form of EBITDA.
Earnings before income and tax.
Okay. Earning before interest and tax. And DA stands for depreciation and appreciation. Good try. Thank you for the response, ma. So I'll put it. It is earnings before interest and tax and depreciation and appreciation value. So this is called as EBITDA or EBITDA, earnings before interest and tax and depreciation. So if there is a depreciation value, so that it is going to be subtracted over here. Depreciation will happen when there is an asset value is going to be depreciated, or it is going to be the residual value of an asset. So it is going to be taken, calculated, and it is going to be subtracted over here. Then after removing the value of depreciation, you are going to get the value which is called as EBIT. So that means EBIT, earnings before interest and tax. So once after getting this value, we will see that is there any interest amount who is been paid by the business. So that amount it is going to be subtracted after EBIT. So once the interest amount has been removed, the remaining amount is called as EBT, earnings before tax. Then tax will be calculated. So once the tax amount has been removed, it is called as EAT or PAT, that is earnings after tax or profit after tax or net profit. So this is how we are going to calculate the values. So hope you people have been understood with the format of an income statement. So if you are clear, you can type it as move on so that we can be able to move it to the transactions, so that we can be able to do it with the transactions. Yes, thank you for the response. Fine, we will see with the practical thing. So is there anyone who will be able to do it today on live? Is there anyone who is doing it on laptop? Type it as me. Okay, fine. So I'll be waiting for you people to tell me any one day that you want to do it. So by the time I'll be doing it on my side. Okay, I'll just reshare the screen. Give me a minute. So I'll share this document on the WhatsApp. So that if possible, you can be able to try to do this. Okay, hope the screen is visible to you people. Yeah, so role of the income statement, it presents the financial performance, also called as a statement of operations and profit and loss statement. So it gives the net income will be calculated based on the revenues minus expenses. Let us put it in as a question. Okay, so you can be able to see that sales revenue formula is number of units sold into sales price per unit. So now let us calculate this. So can anyone try to let me know that what could be the revenue value over here? How do I calculate this? Based on the formula what I have been given over here. So can anyone try? What could be the answer?
So is it 1000 into 250 for year one?
Yeah, so it should be equals to 250 the selling price into the volumes which has been sold for that year. Enter. So this could be the answer. Yes, it was 1000 into 250 or 250 into 1000. So now if I want to calculate the same values on the other side, so I can drag it or I can double click on it. So you can be able to see that the values are calculated over here. So in case if you want to bring this values, instead of using the mouse of dragging, I can select the cell and I can press Ctrl R, so that it is going to give me the same values. Automatically on the right hand side, the selected function, whatever the calculation has happened by using what kind of a function, so that will get applied on the selected wise on the right hand side. Okay, is that clear with this? Now, hope the whole question it is visible to you people. Can anyone try to let me know the answer? A tire manufacturer produces 10,000 tires. So different vehicle segments in the year 2019. Throughout the entire year, the company has sold 2,000 tires at an average price of 200, 4,000 tires at an average of 450, and remaining tires were sold on 650. So what is the revenue of this company? So let me try to give you the answer. So equals to, so in that total 10,000 tires, so 2,000 tires into 200 plus 4,000 into 450 and plus what is the remaining numbers of tires, which is calculated as 650 rupees. Can anyone find out that?
4,000 tires.
Yes, ma'am.
4,000 tires.
4,000 tires. So this is what the revenue, what it has been earned over there. Okay. So now it was two simple calculations what we did. So now let's assume it in this case 3. Let us take it, the selling price was 250 and the quantity as 1,000. Okay, let us take it the same values in the case 3 for the year 1. So now we will calculate. Okay, so the value is calculated. Now here it says it is expected that price will increase 20% and volume will be increased at 30% from the second year onwards. So how do I calculate? So in the year 1 it is 250. So if there is an increment of 20%, so what could be the year 2 selling price? Can you just generally calculate it and let me know what could be the value? On 250, 20% means on 250, if I'm going to calculate 20%,
So it will be increased by 50 rupees.
So it will be 50 rupees increment. So that means what will be the year 2 selling price?
300.
300. So how to bring this? Instead of using the calci and do it manual calculation, I think we have been discussed about in the previous when we were doing with the calculations in advanced Excel. So how to increase the value when we were doing with the power calculation. So I'll just show you once and try to implement the second one. So it will be equal to, I'll select this previous cell plus, I'll again select the previous cell. Why? Because it is not only an increment of 250, 20% on the 250, it will be included with the previous existing value. So that means 250 plus 50. So to calculate that, first I will take it 250 plus 250 into 20%. So this is how the calculation. But instead of doing this, what I will do it is, I will make it B41 as a common factor into, open the bracket, I'll make it as 1. So B41 will into 1, it will be B41 value. That is 250 into 1, it is going to be 250 plus 20%. So on 250, 20% value. So that means 250 plus 250 into 20%. So if I do this, I'll be getting the same value. Okay. So can you try to increase the 30% to increase the value on 1000? Same thing you can implement it and let me know how much it is going to be the value. Can anyone try? How to increase with 30% increment by using the same formula?
So equals to B42
Okay, B42
into
into
bracket 1 plus
1 plus
30%.
30%. Good. Okay, so it will be 1300. So equals to 300 into 1300. So this becomes 3,90,000. Okay. So now all these three, it is calculated with increment of 20%, 30% and the product. So selling price into volumes. So in this case, I will apply this to all the other cells. So what is the shortcut key? So that I can bring this values on the other selected values on the right hand side. What is the shortcut key? I can
Control
use
R.
it. Control R. Very good. Okay. So this is how you can be able to do the calculations at faster. Okay. So this was a first exercise. So this was a calculation of revenue. The next thing is COGS value. Okay. So in case if quantity value is not being given, So if there is no quantity, if there is only value is given, in such instances you can be able to find the calculation as beginning inventory value plus purchases value minus ending inventory is nothing but the closing stock value will give you the cost of goods sold value. Okay. So by using this formula, we will do the calculation. So equals to, what is the beginning inventory value is 1 lakh plus the purchase value is 4,50,000 minus 35,000. So this gives the COGS value as 5,15,000. Okay. So this now, in case when there is no units are provided, if you want to calculate the COGS value, you can calculate in this way. The next thing is the say case number 2. So here it says there is a shopkeeper who has purchased 100 footballs and each football it is worth of 30 each. So the shopkeepers make a sales of only 10 footballs for 50 each. So find out what is the revenue and what is the COGS. So by seeing the formulas what I've given in the chat box, you can be able to find out the answer. So try to bring me the answer for revenue and COGS value. So can anyone try? What would be the revenue value? So I'll give a minute of time. So I'll be getting back to you at 7:17. So by this time, please keep it ready with your answer. So hope anyone will try to give me the answer. At least if possible, you can give me the answer through chat box. If you people are not able to answer it on call, at least try to type it on the chat so that I can consider that answer. It's a simple calculation. At least can anyone try to let me know that what is the formula to calculate the revenue or sales value? At least that. I hope at least by, okay. So number of units into sales. Okay. At least I got the answer over here. So Madhu, try to give me the answer by using this or anyone else apart from Madhu. So you know the formula and you are able to see the values on the screen.
Sir, it's 500, 10 into 50.
Very good. So it will be equals to 10 into 50. That's very nice. Then what could be the COGS value? Try to find out the answer which is there in the chat box once again. What could be the COGS formula?
Sir, is it 10 into 30?
Very good. So it is going to be the 10 units what we have been sold into at what purchase cost? What was the price? What was the value we spent for that 10 sales was at happened? For that, what the cost we have been bear? Okay, so it is 500 revenue and the COGS value is 300. Thank you for the response. Hope I expected from others also to try with. So who was this who gave the answer? I sorry, I couldn't make it.
Abhirami, sir.
Okay, thank you, Abhirami. Fine. So now we will go to the next calculation of gross profit. So this question says a mechanic shop reports a 15,000 in revenue for the April month and they spent 10,000 as a cost of goods sold. So the answer will be equals to 15,000 the revenue minus 10,000 what they have been spent to get that revenue of 15,000. So that means the profit is 5,000. Okay. So the next case. So here what could be the revenue value and what could be the COGS value? Okay, I'll just make this value instead of 200, I'll make it as 180 so that you may have little bit of difference. So can anyone try this revenue value at least by taking the reference of Abhirami what she gave?
So the revenue will be 100 into 180.
Very good, 100 into 180 and
And cost
COGS value
100 into 100.
yes, it is going to be equal to 100 into 100 and the gross profit it is going to be
8,000.
18,000 minus 10,000. Good, fine. So in this case, so this is in case of there is two purchase, two sales. So how do we bring this? So can anyone try? So try with one by one. So split it. Okay. So let me take this. So revenue for the first one. So have a look on the sales has happened for the first sales. It is going to be 50 into 200. So this is the first sales. Then go to the first COGS. So anyway, we have a revenue two also, second sales also details is there. But try to make it one by one so that it will be easy to you to make it the calculation easily. So related to the first sales, that is equal to 50 unit into the value what you have been spent for this 50 units, it was 100 rupees. So it is 5,000. COGS 1 is 5,000. So revenue 2, so that is the sales. The second one was 80 into 200. So which is, oh sorry, so it will be equals to 80 into 200. So which gives you the value of 16,000. So COGS value will be equals to, again it is going to be 80 into 100. So now we will calculate equals to sum of the revenue minus sum of the COGS value. So it gives 13,000. Okay. So this is how you can be able to do the calculation for multiple sales and purchases what has happened in the business. Okay, so the same calculations you can be able to try it over here. So here we have a continuity of the transactions of complete income statement. Let us see with that transactions. So here the company ABC, where number of pens it has sold is 800 numbers at the price of 200 rupees. Initially, the company ABC had 500 pens but purchased additional of 3,000 more pens at a price of 50. So execute the order, find the COGS and profit. So what is the total revenue we had? It was equals to 800 into 200. So it is 1,60,000. And here we have equals 500 opening stock, which is worth of each pen is 50 plus again there was a purchase of 3000. Okay, so suppose if I take it as 3000, definitely it will be an negative value. So let me make it as 300 more pens into 50. So it will be 40,000. Let me see. If I make it as 3000, it will be 1,75,000, which will be definitely a loss. So let us not incur with loss. So this value, I'll change it into the quantity of 300 quantity. Please make a note of this and try to do this calculation. Okay, so 1,60,000 minus 40,000 minus 40,000, which will bring 1,20,000 value. So this transaction, so whatever you are going to see the sequence of transactions, it is connected from one event to another event. So I'm going to EBITDA calculations. So whatever the value it is there over here, so it is equal to this. Okay, so you can see here it is a continuation of the transaction. So there I had a sales of 800 into 200, then there was a opening balance of 500 pence plus 300 pence it was been purchased. Okay, so it is a continuation. In this case, what I'll do it is, so I'll make it equals to, instead of doing a calculation once again, I'll just refer the previous sheet and select this value, so that it will just take that values and I will drag it up to gross profit. So that means whatever the changes, if I make it over here, it will get appear over here. So you can have a look. Suppose if I make it as, instead of 300, if I make it as 3000, so can we see that the changes, it will appear over here also. So let me press Ctrl Z and keep it the same value. Is that clear of linking from sheet to sheet? If you have understood, please type it as yes. In case if you want to repeat it, please type it as repeat. Yes, good. Thank you for the response, ma'am. Now, so the next thing is the continuation over here is the company ABC, however, incurred the expenses like rent, salary, and furniture value. So let me put it as rent, the value as 2000, salary of 5000, and furniture value of 3000. Okay, so let me calculate total Opex value equals to sum of all the values, and the value what you are calculated as OPEX should be minus with the gross profit value, which gives you the value as EBITDA. That is EBITDA value equals to gross profit value minus the total OPEX. So this gives 1,10,000 value, and this value it should be carry forwarded to the EBIT calculation. Okay, so equals to EBITDA and I will drag it till the EBITDA value. Okay, so now the next thing is we have to calculate the depreciation. So how the depreciation calculation will be done? So there is a separate sheet we have been specified over here as the depreciation. So using SLM, that is a straight line method. So here, if you see that on the year 0, so if you are used okay, so let me put it like this. Now the value of the car is 2 lakh. So when you are purchased, so on that year starting there will be no depreciation. So whereas the first year depreciation it will be 2 lakh divided by the number of years, the number of years of life of that asset. So will be assumed as 5 years, and the calculated value equals, so the calculated value is 40,000. So you are going to calculate every year that the depreciation value will be 40,000. So every year if you are going to remove this 40,000, so let me take one more line of calculation. So the first year the value of the asset it will be 2 lakh equals to previous year minus the depreciated value. So the first year end, the value of the good it will be 1,60,000, and if you take it to the 5th year, so the value of an item it is going to be as 0. Okay, so this is going to be your value of an asset for the 5 years calculation, but the depreciated value will be 40,000 for every year. Okay, but here in the EBIT it has been given as expected to function for 10 years. That means the calculation over here it will be 2 lakh divided by 10 years. So equals to 2 lakh divided by 10 years. So which will be equal to 20,000. Okay. So the value will be EBIT value. So that is after depreciation value will be 1,10,000 minus 20,000. So this is going to be the EBIT value. And once after finding that, so I'll connect it from the revenue value till EBIT value. So the next thing is after the EBIT calculated value, you can see that you are supposed to calculate the interest. So ABC company has purchased a car worth 2 lakh through a loan at a rate of 8%. So the interest here the calculated is interest at 8%. So it will be equals to 2 lakh into 8 by 100 or 8%. So which will come up to 16,000, and this value is called as EBT. And the EBT value will be equals to B12 minus, that is 90,000 minus 16,000. Enter it. Okay. So just have a look on this values and let me know, is there any doubt? Please type it as yes if everything is clear. If there is any kind of a clarification, please let me know.
Sir, could you please repeat the interest part?
Yeah. So hope everyone have understood till here. So the next part is calculation of PAT. So that is, again I'll connect it from till EBT value. Then the next part of this transaction, it will be the tax to be paid at 30%. So it will be equals to, sorry, tax at the rate of 30%. So equals to equals to 74,000 into 30%. So which gives you the value of 22,200. So this is the tax amount what you are supposed to pay, and after tax anything is left out, which we will call it as EAT, or PAT, or the net income. So which will be equal to 74,000 minus 22,200. So the value what it is left out, it is 51,800. So this is how you are going to calculate with the income statement. So hope it has been helped you to understand with this. I'll try to share this document also to you people, so that it will be helpful to you to understand and connect it with our questions what we have been having it. Okay. Now we will try to prepare here the complete statement, so that if you people are going to help me out to bring it up. Okay, so I have three statement over here. Okay, so we will do it one statement over here, and I will ask you to provide do it with other two things on your side, so that I can be able to make it out that you people have been understood with this concept. So can anyone guide me that how to do this statement? So it is only the thing is you have to bring this things over here in the proper way, that's it. So what will be the first line item of any income statement? What is the first thing we have to consider?
Revenue, sir.
So revenue. What is the revenue amount you have it now? Good, it was correct answer. First line item is revenue of an income statement. So can you refer this given data and try to connect
Gross sales.
gross sales? So I'll just take this. Okay, so let me type it over here as sales value is 32 lakh 10,000. Okay, now what is the next thing? What is the second line item?
Cost of
The
goods sold.
minus retail.
Good. Cost of goods sold. So here, do we have the value directly as a COGS value, or we have to do some calculations? So do we have any value directly as a COGS value, or do we have some values where we have to calculate it and bring the COGS value?
So we have to calculate it.
Yes. So can you help me out now? So what are the things we have to consider over here? It is beginning inventory, good, plus. So do we have a purchases?
The materials purchase.
Material purchases, very good. So it is material purchases minus
Ending
ending
inventory.
inventory. Okay, so we will put all these things in the values. Good, equals to 2,56,000 as a beginning inventory, plus the material purchases value is 24,25,000 minus the ending inventory is 2,58,000. So the value comes here as 2 crore, is it 2 crore? No, 24 lakhs 33,000. So sales we had 32 lakhs 10,000. Here 24 lakhs 33,000. So this is called as gross profit. So this will be a calculation of sales minus COGS value, that is 7,77,000. Okay, so the next thing is we have to prepare with Opex values. So what are the Opex values do we have it? Can anyone try?
Management salaries.
Management salaries. Good. So the value is 2,40,000. Good. Then
Advertising expenditure.
very good. Add expenses of 68,000. Good.
These payments.
Lease payments of 52,000. Is there anything else? Is there anything else? Can I have a look once again on the table and try to find out, is it only this many are operational expenses or do we have anything else? Good. So Sinchana has given R&D expenses 35,000. Good. Is there anything else?
Repairs and maintenance cost.
Repairs and maintenance cost. So let me put it R&M cost. So that is a value of 22,000. Good. Anything else? Once again, have a look. Or is it that's it?
Sir, returns and allowances.
Yes. So it is returns and allowance. Okay, the value is 48,000. Is there anything else? Once again, have a look and let me know if anything else is going to come under the OPEX.
So that's it.
Okay, fine. So we will consider this and we will make it as total OPEX value is going to be equal to sum of all the above values. It is 4,65,000 and this will be calculated with gross profit value, that is equals to 7,77,000 minus 4,65,000, which gives you 3,12,000 value. Okay, now what should be calculated?
Sir, minus depreciation.
Good. So we have to calculate with depreciation. Value is 78,000 and this will bring us EBIT value, that is equals to 312 minus 78,000. Then So what to be done next?
Interest expenses.
So we have to reduce with interest expense. With the value of 64,000, and this value is considered as EBT value equals 2,34,000 minus 64,000, which gives you 64,000 value. So now next thing is
Minus tax.
so the next thing is taxes. The tax value is 51,000 and the final value is going to be the PAT or EAT or net income, which will be equals to 1,70,000 minus 51,000, which gives you the value of 1,90,000. So this is going to be considered as PAT value. Okay, so I'll save this and I will share it to you people. You can refer this and you can use the previous one. Okay, so let me take this and share it. So please try with this. So this is very simple. You are just going to calculate it in the numbers. And I want you people to share. Everyone has to share me this income statement as an assignment, that after completing this by tomorrow before starting the class. So by our class will be started at 6:30. I expected at least by 5 you people are going to share with this sheet. Okay, it is very simple. It is everything. It is ready. Okay, so I'll share this sheet itself so that you can be able to make use of this and try to do this. So I'll save it as solved paper. Okay, let me put it into the WhatsApp. Yeah, it's been shared. So please have a look on this and try to finish it and save it with your names. I hope you people have been know how to save it with your names, the Excel sheet. Okay, I want everyone to write their names and send it in the WhatsApp itself with the solved income statement assignment. Is that fine? Is that clear to everyone? Please type it as clear. In case of any kind of questions, you can raise it. Fine. So thank you all. Have a wonderful time.
Thank you, sir.
Thank you.